Weekends pose a bit of a puzzle for Hurst cycles analysts. The reason for that is because Hurst declared very clearly that cycles that influence financial markets exist in continuous time. That means that those cycles, the cycles which are moving the prices up and down, continue to exist and therefore supposedly continue to move the prices up and down 24 hours a day, 7 days a week, 365 days a year, plus that extra day every leap year. That means that those cycles are continuing to influence the price movements of a financial market even over the weekend when we're all lying on the beach and relaxing. Back in the 1970s, when Hurst was working with cycles of 5 days and longer, or at least those are the cycles that he wrote about, that wasn't really a very big problem. But for us, working with cycles all the way down to 25 minutes in length, it does pose a very interesting puzzle. Let's take a look at a chart. This is a 5-minute chart of the United States dollar against the Canadian dollar, and in there is a weekend. I wonder whether you can see it. The weekend is actually right over here. It is between this big red bar and this bar over here. So we have 48 hours of time over the weekend in between those two 5-minute bars. Now, as you can see, it doesn't look as if though the markets moved very much at all in those 48 hours. And there are people who say that the principle that cycles continue to work through the weekend no longer applies when it comes to intraday cycles. Well, that might be true, but ignoring the puzzle is not, unfortunately, a solution to it. And let me demonstrate to you why that is. Let's zoom out on this chart. Here is the previous one-day cycle trough, and here is the next one-day cycle trough over here. That was, in fact, the first 5-minute bar following the weekend. Now we're looking back in time, so we have the benefit of hindsight. But there's an important reason that I'm doing this, because I want to explain to you where weekends pose a problem. So there we have two troughs of the one-day cycle. And so, in effect, we have a one-day cycle that goes from over here to over here. That looks very reasonable. Do you notice that there are only two white cycles, the 5-hour cycle, that happened within that one-day cycle? That's really interesting. So we have a 2-to-1 harmonic ratio between those cycles. Now let's count the bars that have actually elapsed between that one-day cycle trough and this next one-day cycle trough. There are, as you can see, 72 bars between those troughs. 72 bars on a 5-minute chart is, of course, 360 minutes, 6 hours. So those one-day cycle troughs are apparently only 6 hours apart. However, in real time, they are in fact 54 hours apart. I hope you are beginning to see how the fact that weekends are simply not displayed on your chart and they're ignored to all intents and purposes actually poses a problem when you are analyzing cycles that play out over time. Was that a 54-hour one-day cycle, or was it really just a 6-hour one-day cycle and we ignore the time that was spent during the weekend? Well, you don't need to answer that question, and you don't really need to worry about it, but you do need to be aware of it. And the reason you need to be aware of it is because in the first few hours of trading on a Sunday night or very early Monday morning, depending on where you are in the world, for those first few hours, the Hurst cycles indicator is trying to achieve a very difficult task. It's trying to find the cycles that it has no evidence of in the previous 48 hours. The cycles indicator works on the basis that it identifies troughs and peaks in the market, and it measures the distance between them, works out what their current wavelength is, and then steps forward and looks for the next trough or peak in that market. When it has a 48-hour black hole with no information, it takes a little bit longer for it to identify the positions of those troughs and peaks. What this means to all intents and purposes is that for the first few hours of Sunday night's trading, or whenever trading resumes following a weekend, you need to be very careful because the Hurst cycles analysis has to settle in. The Hurst cycles indicator is actually very good at identifying those troughs and peaks as quickly as it can, but you must treat your analysis with some caution in the first few hours. Of course, once an hour has passed, the Hurst cycles indicator probably has been able to identify at least 2 troughs and peaks of the 25-minute cycle, and so it's beginning to get a handle on the 25-minute cycle. After the first couple of hours, it's also beginning to get a good idea of where the 90-minute cycle is. As strong peaks and troughs form in the market, it is also able to position the 5-hour cycle. But finding the troughs and peaks of the 1-day and 2-day cycles, and of course the longer cycles, can be very difficult to do early on a Monday morning or on a Sunday evening. It is for this reason that you will sometimes see circles and whiskers that look very strange. Let me demonstrate that quickly so that you have an understanding of why it happens. In this particular example, let's assume that the 1-day cycle was running at its average length, which is about 26 hours. That would mean that 26 hours after this trough over here, on the 29th of July, we would have expected a 1-day cycle trough. That happened to be over the weekend. The next 1-day cycle trough would have been expected 52 hours after that trough on the 29th of July. 52 hours also would have fallen in the weekend, because as we've already worked out, there were 6 hours that elapsed from that 1-day cycle trough on the 29th of July until the start of the weekend. Then of course there were 48 hours in the weekend, giving us a grand total of 54 hours, and the 52-hour mark would therefore have been in the last 2 hours of the weekend. What the Hurst cycles indicator would have done at that point was it would have drawn a circle at the position of the first bar following the weekend, and it would have drawn its whisker indicating the range of time following the weekend that trough could occur. That is why you will sometimes see these lopsided circles and whiskers, with whiskers only going one way or the other. It's because the rest of the whisker is hidden inside the weekend, because MetaTrader 4 doesn't show us the weekends, it doesn't show us the big gaps of time that happen between those bars. As a matter of interest, that would have been a perfectly placed circle over there, because as it happened, the 1-day cycle trough did happen in the first 5 minutes of trading on the Sunday night. Some Hurst cycle analysts believe that it is true that cycles continue to influence financial markets over the weekend, and that the reason why we don't always see big gaps over the weekend, we sometimes do, but the reason why we often don't see gaps over the weekend is because the traders who are trading the markets themselves are unaware of where the value of what they're trading has shifted to. And so the first few hours of trading is a matter of the market finding its true price. So, as a Hurst cycles analyst and trader, you need to be careful for those first few hours. You need to be aware that your Hurst cycles indicator is performing a fairly complex task. It's trying to identify those cycles. Be wary and careful of making trades on the basis of the analysis in those first few hours. And when you see those strange circles and whiskers, you know what they're all about.